The biggest misconception is that you can copy and paste what exists in the West and apply it to the South. We believe that 2 and 20 doesn't work in emerging markets. I see a world where solo founders building companies to billion-dollar valuations without needing a team, without needing a technical co-founder, without needing VC money. Founders should not listen to investors. They should listen to their customers. Unfortunately, VC has developed this reputation for putting investors on the pedestal, and actually it's the founders who should be celebrated and supported more. We are literally creating markets here. That is legacy, and that is purpose.
Africa, Southeast Asia, the Middle East, climate investing, they seem quite what's in vogue in a given moment in time. What would your answer to that be?
Going back to when we first started sort of working together, our first vehicle.
So today's guest is Alina Truhina. She's a managing partner at Atypical Ventures, a new VC firm with backing from the Qatar Investment Authority located in Doha in Qatar. Now, this is a fantastic episode, and I'm really looking forward to bringing it to you. So Atypical invests at the very earliest stages, all the way from pre-seed up to Series A, with a focus on the Middle East, encompassing the GCC, Levant, Pakistan, and Turkey. Now, the real reason that I wanted to have Alina on the podcast today is her wealth of experience investing across a wide array of emerging markets. So over the course of the last decade, she's invested in 80 plus companies across South Asia, Africa, Southeast Asia, and now the Middle East as well. We look at why a Western VC model doesn't map neatly into an emerging market context. We touch on why they've decided to establish a HQ in Doha instead of maybe more established regional tech hubs like Dubai, Abu Dhabi, and Riyadh. What makes a good founder, but also a question which we haven't actually tackled with any sufficiency to date, is what makes a good investor. So incredibly thankful to Alina for taking the time to hop on the pod. She was also in Abu Dhabi to record, which was a rare treat not to have to travel up to Sheikh Zayed Road. So an extra thanks to her for making my journey and commute that bit much shorter for this particular episode. I also just wanted to take this opportunity to talk to you, the listener or watcher. Thank you very much for the support over the course of the last number of episodes. I'm cognizant of the fact that I haven't actually spoken to you directly to date. The support and feedback has been phenomenal. Really enjoying putting this together. We have a massive pipeline of episodes to come with some really terrific guests. So I'm really excited to bring that to you. If you are enjoying, please share with a friend. It would help enormously. Share it with a colleague, sharing with family members, whoever, entirely agnostic as far as who you share it with. We don't mind. And also, please drop a like, drop a follow, drop a subscribe, whatever it is that you want to drop, which is constructive. That would be most helpful. So look, without further ado, let's get into the episode. But thank you. Really does mean a lot. And we're looking forward to bringing you more interesting, in-depth episodes on a consistent basis throughout the course of 2026. But before we get into the episode,
Warren Buffett once said, the stock market is designed to transfer money from the active to the patient. And Lebanese-American mathematician Nassim Nicholas Taleb reminded us that you cannot predict, you can only get ready. Those two insights define today's investing environment. You don't win by guessing the next move. You win by preparing, cutting through the noise, and letting discipline compound over time. That's exactly what Sarwa delivers. Sarwa's modern platform is grounded in simplicity and lets you trade stocks, ETFs, crypto, options, and high-yield savings, all in one app. They keep your fees low, so more of your money goes to work, with minimums as low as $500. Sarwa is loved by experts, not just beginners. Whether you're a first-timer, an active investor, or a day trader, you'll join hundreds of thousands of users who choose Sarwa to grow their wealth. As a Forward Start listener, you get $200 when you open a new account with code FORWARDSTART. All the details are in the description. And if you're chatting to the team, please do tell them that JB sent you. So, what are you waiting for? Get started in minutes and take control of your money your way. Sarwa is regulated by the ADGM, Financial Services Regulatory Authority. The information shared in this segment is for educational purposes only and should not be considered financial advice. Investing involves risk, and past performance is not indicative of future results. If you've ever tried opening a business account in the UAE, you know the drill. Endless paperwork, minimum balance requirements, and traditional providers that move at the speed of bureaucracy, shall we say. HubPay, however, was built to change that. It's a fully digital ADGM-regulated fintech platform that gives UAE businesses instant access to multi-currency accounts with named IBAN in 30+ currencies, payment links, payroll, and much more. There's no hidden fees, there's no minimum balance, and if you're like me, you're in a hurry, there's no waiting. It's amazing. So whether you're a startup who's paying contractors in Asia, or you're a scale-up managing suppliers in Europe, or even if you're an enterprise running treasury across multiple geographies, with HubPay, you can open a business account and become financially operational within a week. Can you imagine a week? No paperwork, no branch visits, no barriers. It's trusted by 1,000 plus UAE SMEs from tech startups all the way up to mid-market enterprises. So what are you waiting for? Open your HubPay business account today and get a 30-day free trial at wearehubpay.com/pricing and scale your UAE business with confidence.
Alina, thank you so much for joining me today.
Thank you for having me.
And you've made the trip to Abu Dhabi as well, which is a rarity, as I was telling you off camera here. Generally, I have to go up the Sheikh Zayed Road. So thank you for especially flying in just for this, which is exactly what you did, no doubt. Yes.
It was a whole 45-minute flight.
Yeah,
So
I enormously appreciate it. I really,
My
really
delight.
do. Can we start off actually maybe with... I was trying to figure out the best way of describing this, because I was going to say you wear many hats, but I feel like you work for many hat companies. I don't know what the best way of framing it is. So we have obviously Atypical Ventures in Qatar. Can you describe, this all falls under the umbrella though of Utopia. Can you clarify everything that's going on here?
Clarify all my different hats.
Yes, please.
And you're absolutely right. The different hats do converge. So let me give you some context. So Utopia Capital Management is basically a platform of both VC funds and now most recently the studio, which we recently announced.
I saw this. This was only like 2 days ago, wasn't it?
Incredibly exciting, yes.
Looks really cool.
Where we've kind of revealed it at the Mobile World Congress in Doha, which was the first MWC in Doha 2025. And I think they're coming back next year, which is exciting.
Good.
So basically, we're a platform of VC funds in a studio. And the idea is that we basically converge funding capital, local intelligence, right, which means we're all on the ground in our respective markets, as well as now AI native infrastructure and technology. And so those three things kind of combined give rise to all the different entities within our structure, but all of that is integrated under one umbrella, under Utopia. So to your point, we have Utopia as the, let's call it the mothership, the platform. We have Atypical Ventures, which is the Middle East plus Turkey and Pakistan fund. So it's a Middle East plus fund, if you like.
Yep.
We have the Radical Fund, which is Southeast Asia fund, and it's investing in climate-focused companies. And then, as I mentioned, we have the Utopia Studio, which is both building new companies that are AI native, as well as re-engineering existing early-stage companies that the funds are investing in to basically scale them to growth.
Broad geographic focus. Why?
So actually, not many people know this, but my partner and I have been always passionate about and always wanted to only work in emerging markets or emerging and frontier markets. And 10 years ago when we first met and we first started working together, we actually wanted to raise an emerging markets fund or a fund that's covering the global south. But we realized that actually you can't do that. Again, so many things are about
tough sell.
Time. Timing, exactly. This was back in, 2015, 2016. So, and so we realized we actually need to put in a lot more work and invest in these respective regions. But it's always been a part of our philosophy and part of our mandate. In fact, Utopia's vision is essentially to be in a world where innovation is actually accessible to all, right? So much of it is us thinking about Silicon Valley in the West, Europe, UK, sort of leading the charge in when it comes to VC. But actually the Global South has incredible talent, incredible potential, and as we know, is rising to build these ecosystems of startup economies. So for us, it's always been about the Global South, or it's always been about the emerging venture markets. And it's what we find exciting. So yes, we've spent a lot of time in Africa, then we've spent a lot of time in Africa and South Asia, actually, which is where we started. Then Southeast Asia, of course, and then of course, the Middle East was a natural progression forward.
And what drew you towards those particular emerging venture markets? Because you're not from Africa, you're not from the Middle East, you're not from Southeast Asia. So where does that stem from?
It's a great question. And I would go back to, for me personally, it is the excitement of building something new. Many people ask me why Doha.
Yes.
I think you also wanted to ask me that question. Why Doha? Why not Dubai? Or why not Riyadh or Abu Dhabi? There's something special about being at the forefront and influencing change. If I look at the West, and to your point, both my partner and I could have had probably safe and secure jobs working in those countries. But rather than sort of making something better or easier, more convenient, rather than sort of investing in things that are kind of addressing problems, we are literally creating markets here, right? And that is legacy, and that is purpose, and that is intentionality. So I wouldn't trade it, and I wouldn't do it any other way.
Did you have that interest from when you were younger? I feel like I spoke to someone recently. They were like, like a Lonely Planet sort of child, and they really enjoyed that. Like, is that something that you sort of resonate with as well?
Yeah, I think there's something to it. I am, I do come from, let's call it humble beginnings.
Sure.
And I was born in Europe, and I was born during Soviet Union, and our family has seen a lot of kind of disruption to our lives. And I'm very privileged that I have had the opportunity to move to safer countries. So we moved to Australia as refugees, as political refugees. So I think you're absolutely right. I think that kind of that spark, or that, that emotional drive does come from two things. I think one is wanting others to have the same opportunity that I had in terms of access to capital, access to market, access to network, and also showing through my work that there's incredible people in the markets that we work in and we invest in, and those people are as good, if not better, people where versus those that are born in places that have more resources, have more infrastructure.
You could take a step back and go, okay, Africa, Southeast Asia, the Middle East, climate investing, they seem quite what's in vogue in a given moment in time. What would your answer to that be?
Yeah, so every time we have evolved our model, we have evolved our model. So, going back to when we first started sort of working together, our first vehicle, if you could call it that, was an impact-focused vehicle. And we didn't invest through equity. We actually provided grants and worked with governments, specifically with a gender-focused lens thesis. This is, all the way kind of, back 10 years ago. And we've evolved since then, and we've looked at different types of corporate-led innovation and models. We looked at and built operator-type investment vehicles, blended finance vehicles, and then, of course, traditional VC funds and studios. And so the kind of the thread or the pattern, if you like, is that we believe that every region, every market in that region, in that specific time frame, requires a very tailored approach to investing. So, what we did in South Asia or Africa or Southeast Asia will not work in Middle East, right? Which is why we are where we are now in a consolidated, integrated model of both kind of funds and a studio. But not many people think about it that way because, of course, it's easier or it's more standard, more acceptable to, do a fund or to do an accelerator or to do something else. We really believe in evolution. And so when we, started our work, and before we even started our work, before we raised the fund in Southeast Asia, we looked at the region and we saw incredible funds, that have been, of course, deploying and investing for a long time, mainly kind of generalist funds, mainly those focused on fintech, e-commerce. And we looked at, the intersection of where we can see the potential for, greatest returns and exits in the space, as well as the greatest opportunity, right? And so climate became our thesis because of that. More than that, it wasn't just climate as decarbonization. We saw a niche because not many funds, and still to this day, not many at all, are targeting climate adaptation. So we actually said we will invest in both mitigation and adaptation for a more integrated investment thesis as such. So every time we've come to a region, we've taken the approach of what works, what will work, again, to deliver the biggest ROI and ecosystem impact. And we did the same thing in Middle East.
Can we actually stick on climate? And we're moving around slightly from the structure, but can you actually maybe just provide that distinction between adaptation and mitigation?
Yeah, of course. So most of the world, in sort of simple terms, is looking at how do we decarbonize, how do we take carbon dioxide out of our ecosystem. Whereas adaptation, the thesis behind it is to say, actually, unfortunately, we're already going beyond the 1.5 degrees, right? And unfortunately, we are already witnessing here, where we are today, and definitely in countries like Philippines, like Thailand, we are witnessing disasters. We're witnessing unprecedented change, and we need to adapt to that change. And so we need to look at innovations that allow us as humans, but also the entire planet, to be able to do so. Unfortunately, most of the rhetoric in the last sort of, let's say, decade has really focused or has really said that adaptation is the work of governments, because it's large scale, it's infrastructure related, it's physical. And so it hasn't been so prevalent in VC industry. Again, for many reasons, which we can talk about. But it is absolutely needed, right? We absolutely need to invest in adaptation technologies and adaptation, again, both hardware, software type companies in order to see the progress towards climate action.
So when you're looking at Southeast Asia, then you identify climate as something. How do you actually go about establishing the fund on the ground? What does that look like in practice?
First of all, you come to Thailand,
Okay.
and you spend time in Bangkok. In all seriousness, you have to spend time in the market, right? So I lived in Bangkok and, of course, traveled across the region whilst living there for a very long time. So I think that's the first thing. Like the Middle East, Southeast Asia is very much built on trust and relationships. But also in order to really understand, the type of innovations or solutions needed in the market, you really need to spend time with people, right? You need to understand the consumer, the demographics of that market, not just by reading a report. You need to be there. And then you build an incredible team. And I'm really, really proud. I had all of the Southeast Asia team with me in Doha last week. So all of them are coming again because there's this natural one team under Utopia that we actually not just transfer sort of knowledge asynchronously, but actually come and visit our respective markets. So they were here in Qatar, not in Abu Dhabi, and their team are all local. So I have people who are in Indonesia and Singapore, Malaysia and Thailand, and all we do is spend time in market.
And how has it been going? Because climate has become something of a dirty word. In certain circles.
Look, it is unfortunate. I'm not gonna say that the industry hasn't been impacted. And actually, maybe just to take a step back, we think of climate not as a select sector. We think of it as actually a cross-cutting
intersects in so many different,
exactly.
Yeah.
So what that means, and for us, what is climate? Well, again, kind of coming back to mitigation adaptation, it is a spectrum. So it's everything from energy and renewables to built environment to nature-based solutions, food and agriculture. And then on the adaptation side, it's much more around disaster risk management and prevention. It definitely is about healthcare, water tech, et cetera, right? So if you look at it that way, actually, and you can segment, climate with those, you have different data, and energy and renewables are, have been increasing rather than decreasing. But
because there's this tendency to pigeonhole, isn't there? Like you have this idea in your mind of what it is. I remember speaking to Mark Kahn from Omnivore. Exactly. And, the climate tech fund, the focus is on agriculture. That's sort of how they frame things.
Yeah, and I think it's it's something that Mark's a good friend. So is Sonia from VentureSoak, who's also a huge climate advocate. I think us as kind of climate GPs, if you like, we need to get our job done, which is how do we get the money flowing to the places where we want them to flow to, and to the people and solutions, i.e. climate solutions that we want them to. So sometimes it does take, of course, education, and of course unpacking. There's a lot of semantics. There's a lot of acronyms. There's a lot of folk that people don't understand. For those who don't know folk, first of a kind technologies, which is absolutely fair. So when talking to prospective LPs or existing ones, it is about a journey of educating them of what matters. And so to answer your question, I don't think climate tech investing was a bubble, or that it is certainly, the capital has shifted, but I think we're just scratching the surface. I think we're beginning, and by we I mean sort of the investment community globally, we're beginning to understand what type of capital is needed where. There's a lot of sort of dialogue around capital stack for climate, looking at equity and debt and R&D and revenue financing mechanisms, because in reality climate tech is not like fintech and e-commerce, right? For many different reasons. And again, we as investors need to be adaptive to those realities, to make sure that we're funding the right solutions that are disrupting, and addressing the climate crisis.
Bluntly, does a 10-year time horizon make sense?
It does for some companies. Of course, it doesn't for others. Again, I think it would be a generalizing kind of answer to say yes or no.
Sure.
We have invested, for example, in companies that are much more software enabled rather than hardware. And, we've invested in companies in countries where the regulatory environment, quite frankly, is much more amenable to and are much more favorable to, again, let's say, climate solutions. And therefore, the speed of change and the type of funding available is obviously different to others where things are a little bit more nascent, right? All of these things help. And so, but yes, if you're looking at as overall and understanding sort of what it takes to build a climate company that has a lot of physical aspects, that requires a lot more sort of patience in order to get the right sort of regulatory approvals. Yes, there will be some companies that take longer time to commercialize, maybe even longer time to get to market, right? If it's a kind of a new biotech type of innovation. So, but not all of them.
Okay, I've gone off on a massive tangent there. We didn't even
we
get.
Keep talking about
we didn't
climate.
even get. Maybe we'll talk about it in a MENA context.
Yeah.
Then I think maybe it would be helpful. So, what opportunities do you see specifically, maybe regionally, as it pertains to the climate tech side of things? Because I'm speaking to actually Talal from 4401 next week, for example, and they're doing some interesting stuff on the carbon capture and mineralization side of things, which obviously is so pilot led, and there's obviously a long time horizon involved there. Where do you see the greatest opportunity regionally as it relates to the climate?
Yeah, maybe let me take a slight step back just
Please.
to give a kind of, again, some context as to how we see and how we invest here. So Atypical is actually sector agnostic. So climate is one of the, again, sector, not sector.
Yes.
One of the spaces we look at. But actually what we've done over the last sort of 12 months is really understand what does it take to build a category defining company of the next generation. Big question.
I was going to say, it's a small undertaking.
What does it mean? But what we've done is very simple. We've looked at the type of technologies that are available. Obviously AI springs to mind, and for us AI is technology. It's not, again, it is not a sector.
Yep.
It is the kind of the rails and the infrastructure with which you get to scale, right? And we looked at, again, in our true manner, where is VC going, right? And with that in mind, where are the different markets going, and what type of founders are we seeing in getting to success? And we come up with 3 sort of very simple hypotheses.
Okay.
Being a VC, being maybe a little bit contrarian. And we really think that, VC is going to evolve to the point where the way we currently fund and invest in companies is going to be completely different. I think we're already seeing the effects of that, right? Let me unpack that.
Please.
It's no surprise to people. AI is obviously changing a lot of things, and the speed at which companies are developing MVPs and prototypes and getting to market and validating their users has significantly shifted, right? And for us, I mean, we spend all of our time with early stage companies. So it's idea stage to Series A. So what does that mean? It means that the cycles and the kind of the type of engagement that ventures or founders need to get through to build a scalable company is going to be completely different. And we need to adjust to that as VCs. So I see a world in which, and this is already happening in the West, where you're getting solo founders building companies, much, much faster to billion-dollar valuations without needing a team, without needing a technical co-founder, without needing VC money, right? So if that's kind of our, I say, kind of, potential, yes. What does it mean for our regions? Well, I think we can get there, right? And so through the studio and through our funds, what we envisage is a world in which the studio is actually building these AI native companies, and we're getting founders from idea to Series A in less than 24 months, which means go to market, first customers, first dollar. And the funds are investing in those companies, right? So you're sort of disrupting the way, let's say, bridge rounds work, the way,
Yes.
kind of valuations would hopefully also adjust. And within that, we said, well, what excites us? And we've developed an approach which we are calling problem-orientated deep dives, or pods for
Pods.
short.
I saw this. I was on the website. And I was like,
Yes.
oh, okay, that's great. Yeah. Okay.
And because we know we need to look for high value, high complexity problems that will be sticky and that will deliver incredible returns, because that's where technology, especially if you apply AI to it, can optimize and accelerate the innovation in those spaces. So it's kind of your unsexy, boring places. And therefore partnering to co-build with founders that understand those spaces really well. So rather than sort of looking for an entrepreneur coming out of university going, yay, I want to be an entrepreneur, isn't it great? Really looking for those experts, those domain kind of specialists that have spent time, have built network, really understand the customer pain points really, really well. And we provide the technology, we provide the access to market, we provide the team and kind of support that they need. So it's in that partnership that we really see opportunity. So now to answer your question, what are these pods? So pods are basically your kind of thesis focused clusters or opportunity clusters, where we think we can kind of compound IP
Sure.
with talent, domain experts, and capital to actually build those category defining, category disruptive companies of the future. And so we've identified, we will work kind of in cycles. We've identified our first pods.
Go on. Do tell.
the drum roll. So let me give you a few. So one is in infrastructure intelligence.
Okay.
So we're really obsessively looking at things like data center optimization, grid optimization, things like maintenance and infrastructure. There's a lot of, and that's very closely tied to obviously energy consumption, etc. We're looking at sovereign systems, cybersecurity, government intelligence, kind of data layers there. We are looking absolutely at kind of decarbonization opportunities as well. And that's both kind of cross-border logistics, maritime, and then, of course, built environment and consumer-led type innovations. And then, of course, things like, health and health tech. And within that, looking a lot in women's health and aged care. But also, kind of last but not least, across the kind of the fintech layer of what we're calling kind of the flow rails, the infrastructure that's needed under those kind of complex problems. And that includes things like remittances, SME financing, wealth preservation and creation, but also things like tokenization as well. So those are the things that are exciting.
It all makes sense to me. There's nothing that I can push back on. I'm like, yeah, okay.
Good. You're first.
Totally
You're
fair.
validating.
I validated in real time. That's all you needed was my seal of approval. Anything other than that is entirely superfluous. Can I ask then, how collaborative is the process? Say you found a founder, is it that, are you matching a founder to a solution? Is it collaborative in terms of coming up with what that's going to look like? Maybe even just break down the studio model in its entirety would probably be helpful, really.
Yeah, absolutely. So again, great evolution there because, we looked at first of all, we looked at what we've done in the past, and then we looked at all the different other studios that, we know of, and there's a lot of great work going on there. And so the way we're approaching this kind of the AI native studio is twofold. So there's an element of co-building and partnering with the domain expert. Now, the way, and you might ask, well, how do you find these guys and girls, right?
You've read my mind. Good.
And we've taken the stance that a lot of the time funds and studios and kind of kind of investment professionals go out and sort of market the entity itself, right? Which is natural, and you need to do that because founders need to kind of find you. But this time we've taken a different approach. We've said actually founders care about the problem. They don't care that we're Utopia or Atypical or the studio. I mean, it's cool, it's great, and we think it's cool. But actually, they really care about the problem that they're in, right? And if you're really looking at somebody who is an engineer on an oil rig who's spent the last 15 years obsessively trying to change things, but, and may not necessarily know that they're an entrepreneur, or may not even think about, kind of venturing into the space. Again, they care about the problem and the space and the customers. And so our thesis is actually, let's put out all of our thinking, all of our research, all of the insights and data points around these specific clusters. Let's just literally put it out there. And you can find it already online, where our first cluster's gone live yesterday, I believe.
Yep.
And let's see, like, who else is excited about it, And, the thesis is that people who are and want to build in those kind of sectors, in those problems, clusters, that's how we'll connect, right? So obviously there's a bit of outbound and inbound,
Sure.
but the attention is spent much more on the problem than on anything else.
I was going to say, practically, you'd want your SEO to be very, very good in that instance from a discovery perspective.
And that, but also, like, we've spent time as a team rethinking the whole, you and I spoke about events, right?
Yeah.
I mean, traditionally, VCs kind of hold events, and again, that's needed for many different reasons. But how do we actually penetrate and engage communities where VCs are not even understood or known?
Yeah,
right?
to your point, the engineer on an oil rig, it's very unlike, how is he going to come into contact with? It's such a sort of sourcing and discovery problem.
Precisely.
No one is really,
Precisely. So how do we meet them where they are,
Yeah.
right? So how do we go into hospitals and talk to doctors? In fact, one of our first ERs that we're already working with is a medical doctor. Okay. And so I think it is about sort of thinking differently and creatively about how VCs and for us specifically, how we find these domain experts. That doesn't necessarily mean the traditional VC sourcing tactics of events and whatnot. So that's how we find them. But basically, after that, it is a very tailored kind of experience. It very much depends on the entrepreneur, and some may already have, again, kind of a concept in mind. Sure. But the idea is most of them will be coming in for us to co-build the concept with. And so over time, we're building 140 concepts, roughly, over the next 5 years. Wow. Not all of them will be viable, obviously understood, traditional power law of VC economics. Yep. But we will be spinning out those that have the potential and have shown, the right kind of traction, where, again, the funds will be investing them to take them to Series A onwards. But it's a very sort of co-building kind of approach without any kind of programmatic or standardized kind of manners.
Do you have a bias in terms of the particular qualities or characteristics that you look for in founders? Like you've described there, obviously, domain expertise, which helps. But aside from that, then, is there anything in particular that stands out or that you've learned from experiences in other emerging venture markets?
Yeah, it's a great question. I think two things. There's definitely something to be said about grit and resilience. And those two words I'm sure come up a lot.
You would not believe this is... Every episode I've recorded so far
has been
grit,
those two words.
Resilience. No, resilience. Honestly, this is... Okay,
I mean, there's a book called Grit. I don't know if you've read it.
No, I have not.
It's a really great book. Because, I think from, again, for many different reasons, but even just reflecting on what it takes to be an entrepreneur, is you go through a lot of challenges, right? To say the least. And so, especially in, markets that we work in, some of those challenges compromise your ability to, make kind of, or rather put you in a position where you have to make decisions vis-a-vis your family, your definitely your lifestyle. So, without it, I think you have to be a little bit crazy in order to sort of keep going. Other than those two things, humbleness and curiosity to learning, right? And openness to learning. And I know that sounds obvious, but, just reflecting on the way some entrepreneurs respond to challenges says actually much more about the entrepreneur's potential and ability to then lead and build something, than in other contexts where they might be incredibly technically astute and incredibly skilled and, have, again, a lot of IP that they're bringing to the table. There's a reason why VCs will always tell you they invest in founders, not the ventures, right? So if you have a founder that if you have a great business, a great venture, great concept, great, again, great timing, great market, but a bad entrepreneur, you're not going to build a great company.
And can I ask about the inverse of that then? If you have an exceptional founder and you maybe over-index on that versus the market in which they're building, has that ever happened?
Yeah, but they pivot.
They figured it out.
Again, they pivot, right? And in our stages, pivots are, a must almost,
Part and
right?
parcel of, it's unlikely it's going
Exactly.
to be a linear,
Precisely.
journey.
So again, you're looking for those traits because you already know that the company that you're meeting today at pre-seed is not going to be the same company at Series A. So again, those kind of traits, personality traits and behaviors are signals of what will be happening when the company will hit a point where they will need to make, again, change to the business model or, go back to this kind of square one. And those founders that don't have it and don't have what it takes can't do it, right?
In terms of the founders that you do pass on then as well, do they have any particular trait in common, would you say? Because, I mean, invariably, you're probably passing on 99% of the founders on one level that you come into contact with. Is there anything that stands out that's maybe a particular red flag, or if there's anything that you just noticed over time is, oh yeah, that quality kind of keeps popping up?
Yeah, it's an art and a science, isn't
Yes.
it? I mean, one of the things, to your point, I was just reflecting as we, again, constantly tweak our sourcing and kind of investment process to be better and to be more founder-friendly, but also be better at identifying opportunities earlier.
Okay, and if we go back to maybe Qatar specifically, obviously a small market, all things considered. So where are the founders coming from then? So you mentioned that it's a broad geographic scope or sort of aperture whereby we've Turkey, Pakistan, and also the broader region. The founders need to relocate to Qatar, or how is this working?
Yeah, great question. So first of all, I mean, part of the reason, at the end of the day, we're venture capitalists and we're investors and we're builders of scalable companies, and so we always need to look at how do we have a large enough diversity in the portfolio, and that includes all the aspects such as geography, in order to build a de-risked portfolio of companies and invest in them. And so hence, kind of the again, strategic arbitrage between certain markets that have kind of more mature ecosystems but less capital availability, or those ecosystems where compute power is much more available than in others. All these things come into mind. So that's kind of the de-risk and the diversity piece to it. In terms of Qatar specifically, Qatar is our home. It is our HQ. We have purposefully, as I said, in the last sort of 12 months, have integrated all of our entities for the fund manager to be based in Qatar, and we look forward to being in Doha for a very long time to come. And two things: Qatar is growing rapidly in terms of the startup economy. If you look at the last 24 months and you compare to where we're now, significant strides have been made. And that is thanks to a lot of the kind of state-led initiatives, not least, Qatar Investment Authority's $1 billion fund of funds, of which we're the first international VC to get that backing, which we're really proud of. There's many other fund managers, of course, that are already here and coming in. But it's also, thanks to other, again, programmatic activities that are coming out of other institutions and a growing private sector. So for us, Qatar makes sense because of this very special kind of, I would say, convergence of creativity, because it's a very creative cultural place. Talent, the fact that there is, and it is attracting a lot of global expertise. Of course, infrastructure and capital. And for me, it sort of resembles some of those innovation hubs like Singapore, for example, right, that have done incredibly well in establishing themselves into that kind of innovation and investment hub of the region.
How does the relationship with QIA come about then?
I mean, we've been working closely. So actually, it's a good question. One of the things we always do is, we look for a partner on the ground. We've done this, in every single region. In Southeast Asia, we have an amazing partner, a family office who is our anchor, who's based out of Thailand, Bangkok, and so that helped us establish ourselves there. So we've been working with QIA for the last sort of over 2 years. Of course, even before the fund was officially announced in February of this year, and they've just been an incredible hands-on partner. Again, I think we have different types of LPs and different types of approaches, and different LPs engage with GPs in different ways. And they've been incredibly supportive, to the point where we've just last week, I'm sorry you missed out, we've just hosted we've co-launched Qatar's first VC association earlier this year.
I saw this. My invite must have got lost in the post.
I'm
It's fine,
sorry.
it's fine.
I'm
Sure,
sorry.
it's on the way.
There will be many more to come.
Okay,
there
good,
will be.
very good.
So we launched it officially during Qatar Economic Forum in May this year, and then last week, so QIA and QVCA co-hosted an event for kind of the regional and local ecosystem. Again, sort of spearheading and highlighting the work that's been going on over the last 12 to 24 months and what's coming. There is a lot of work to be done, but they're absolutely at the epicenter of making sure that happens.
How did you pitch Atypical? What was most compelling?
Well, you'll have to ask them.
This is true. This is true.
I
Ask
don't
the
know.
correct person.
I could look. I'll tell you what the kind of the feedback that we get generally from LPs in the sense that I think it is a combination of the fact that we are a differentiated model, right? That it's not just a vanilla 2 and 20 VC, right? Why? Because we understand what it takes to build and invest in companies in those markets, as we've described, right? But combining sort of the aspect of needing a team and a technical team that supports and de-risks the portfolio, combined with the fact that we are local. So again, having people in Southeast Asia on the ground, me spending my time and my partner, in the markets. We're not sitting in, sort of a New York office, dialing in, from time to time. We're not flying in and flying out in that respect, right? And we really, really, truly believe around that local boots on the ground methodology and approach, because most LPs don't have that access, right? No. So for them, it's important, and they see this as a critical element to not just sourcing the best founders, but then supporting them to the next stage and to obviously facilitating the kind of the performance that we look for. And team. I think the team speaks for itself. The combination of all the different skill sets, both in terms of track record of investments, but also in terms of understanding the emerging markets that we work in, which is quite novel.
I was going to ask about this from a hiring perspective. We don't often speak about that from the VC side of things. It's always just exclusively from a startup side. So obviously something you mentioned there is the sort of deep domain expertise and operational expertise especially important from a venture studio perspective. How do you actually go about hiring a team for that?
First of all, we are hiring.
Oh.
So great. Thanks, Jamie.
You're welcome.
So we are hiring. We're about 15 people at the moment under the whole kind of Utopia platform across the board. And we are hiring for the studio. So a lot of the roles that we're looking for at the moment are those kind of very, specialized and specific around product, around design, around, of course, AI technologies. So a couple of things. I think what we look for is, and in a way, and as you said, this is kind of similar to the types of things we look for in founders, right? But we look for deep experience in a specific domain, right? So whether that is investment or whether that is product or engineering or whatnot. But then we look for transferable skills as well. And it's funny, we did this exercise last week with the entire team where all 15 of us come from different countries. We don't have not one person coming from the same country. That diversity is, I think is paramount in all the work that we do. And that diversity also lends itself to different types of cultural experiences, different types of professional experiences. So that kind of transferable, many would call it kind of soft skills, is incredibly important. Why? Because culture and collaboration builds the best companies. And at the end of the day, that's what we are, right? We're building a platform, we're building as a team, we need to do the best that we can do in order to invest in the best that we can find.
And to your point there about diversity, I suppose that extends somewhat to the geographical sort of disbursement in terms of scope as well. I'm keen to maybe get an understanding, like what transfers, like what have you seen in Bangkok that transfers over to, a Doha context, or from, Lagos over to, is there anything in particular?
It's a great question. Many things. And actually from very, very much from actually purely from a kind of a venture startup perspective. One thing that we've noticed over and over again is that sometimes for a startup to expand to a new market is much more valuable and appropriate and strategically opportunistic to go to a market that's outside of their respective region. And we're starting to see that, and we're actually doubling down on that within our platform. So we're now actually
That's interesting.
having our portfolio companies expanding from Southeast Asia to Middle East, Middle East to Southeast Asia. With time, as we go on and launch in other geographies, we'll continue to do that. Because of these changes that I was kind of referring to earlier, is, you know, the kind of the arbitrage, strategic arbitrage that happens between the talent availability, again, infrastructure availability, you know, capital, you know, government infrastructure and government support. You're seeing kind of these elements, plus then you layer on the kind of the impact of, you know, demographics and consumer behavior. And so, yeah, it becomes much more viable and important for a company to come from Singapore to go to, you know, to Qatar or to UAE or to, you know, any other country or Jordan or to Mexico, right, than it is to go from Singapore to Vietnam, for example.
Arguably advantageous from an exit perspective at some point as well down the road. Like historically, you've looked westwards and you've looked at the NASDAQ maybe, but obviously I suppose with the development of the Tadul in Riyadh in particular, and the seemingly incredibly, you know, the breadth of companies queuing up to go public there, maybe that makes sense. I mean, maybe saw that with Sari and ShopUp combining as well from a Bangladeshi perspective, and how that maybe ties in there. Maybe Southeast Asia, something similar, maybe?
Yeah, absolutely. We're seeing a lot of interesting companies from Malaysia, Indonesia, when it comes to kind of Sharia compliant financing, right? Being built that are very much applicable to this part of the world. And again, things shift, right? So, you know, 2-3 years ago, that corridor did not so much exist. And arguably it's still nascent, right? So this is where, going back to how we're always excited about building new things, we see ourselves as strengthening that corridor. And we see, you know, more and more, again, you know, certainly I can speak for Qatari institutions, you know, Qatar Development Bank was just recently in Singapore. They've done a lot in the country and with the country, and, you know, strategic partnerships, and that continues. So kind of encouraging and looking for, as you said, the right growth opportunities, the right exit opportunities, is part and parcel of, you know, what we need to do as investors.
What sector are you most excited about, in particular? If you're just, I'm putting you on the spot.
You are putting me on the spot, but I have a good answer.
Okay,
it's a very personal answer.
Okay.
I really love health tech.
Really?
Both my parents are doctors, so I grew up in a household of 2 dentists. You know, in another life was actually hoping to become a doctor myself. Luckily.
Same.
Really? Yeah, Luckily, I did not.
I missed out twice.
What did you want to be?
I just wanted to be a general practitioner was the ambition, I think we've a test. It was actually based on the Australian test, funny enough. It's called the HPAT in an Irish context. I don't know what it's called in the Australian context, but yeah, I missed out twice. Unfortunately, I didn't hit the requisite score. Absolutely not. I would have been a terrible doctor. I'm a terrible podcast host. I don't know. I'm still trying to figure out what I'm going to be when I grow up, unfortunately. Hopefully I figure that out one day. But I don't know. Part of me thinks maybe I do regret it to a certain extent. I think maybe there's something about the immediate maybe payoff in terms of having an impact. I think this is something I've discussed with someone recently as it relates to even the investing side of things. It takes so long to see, well, so long as if you're good at it or not on one level, because, you know, it's so many years until, you know, you might be good at building, but from a, you know, purely sort of returns perspective, it's obviously quite a long feedback loop.
I guess it also depends how you define success and impact.
This is true.
You know, and I think maybe that even changes as we kind of get older.
This is true.
And realize the most important things in life. But no, you're absolutely right. I think that you know, VC is a long-term game, right? And again, I think that's partly why you know, having pure financial ambitions, quite frankly, is limiting. I think it's super important, and of course, again, I get the question of, are you an impact investor all the time, especially when speaking about climate? And my immediate response is, you know, how can you be an impact first investor when you're an investor? You know, investment itself lends to having a sustainable financial model. But there's so much exciting kind of changes that we're, again, witnessing And we've taken the road of like, let's be part of the action. Let's actually create those changes where, sort of developing second time, third time founders is as important, if not more important, than actually seeing DPI next year.
We've discussed traits and qualities in founders. What about investors? What makes a good investor?
Oh, that's a very good question. I'm going to go back to, again, in our context, right? Because I wouldn't know, or I could guess, but let me speak for kind of emerging markets.
Sure.
It is absolutely having that experience, and on the ground experience in the markets that you invest in. I speak to some LPs and GPs sometimes, and they kind of ask me, well, how can you work in these places? There's such exotic places, including Qatar. Would you imagine? I wouldn't have thought that people think Qatar is an exotic place, but people don't know it as well yet. And then when I ask them, when was the last time you were in Jakarta? When was the last time you were in Amman? The response sometimes that I get is, oh, I was there as a kid, we were on a family safari holiday or something. And there's your answer.
Not quite the same
There's
thing.
your answer. So there is absolutely something to spending time in the markets and with people and building that trust, because at the end of the day, and we see that in the companies that we back, we cannot invest in companies that are purely SaaS companies. Sure. There is a people element, an offline element. And actually, those that are more successful are the ones that combine the online and offline. They're able to scale in the global south much faster. So it's definitely that. It's humility. Personally, as a woman investor, it comes with all sorts of peculiar challenges and opportunities too. Yeah. But it is humility. And I always say investors are just as good and are on the same in the same place as entrepreneurs. I consider myself an entrepreneur. And so, being humble enough to recognize the privilege of working with incredible people who are putting their lives and families on the line to build innovations for our generation, and recognizing that, and not being an asshole, excuse me. Yeah. You can edit that bit out.
Absolutely not. Staying in.
Because unfortunately, VC has, developed this reputation for many reasons of putting investors on the pedestal, right? And actually, it's the founders who should be celebrated and supported more. So humility and recognition and appreciation of the responsibility that you have in order to invest in the best, so that the whole ecosystem benefits from it.
I suppose, look, it's testament to a certain respect. Sometimes we say MENA or we say GCC and we sort of treat it as this homogenous sort of glob, and it's certainly anything but that.
It's not monolithic. Absolutely. And it's taking the time to actually understand the real fabric. My favorite thing to do when going to any country, especially if it's a new country, is to go to places where people live. Not to the business sector or center, but go to where people live, because that's where you'll see the gaps and opportunities. And that's actually how you'll be able to then understand what the entrepreneurs are building and why they're building it. Looking at the informal sector and the, versus a cashless society. Very divergent solutions that will be coming out of that. I don't know how you can invest and understand entrepreneurs without understanding it yourself firsthand.
Sometimes it's just compulsion to race ahead. Like, I was chatting to Ibrahim. He launched like 11 out of 15 markets for Kareem. And he mentioned the first thing that he did before expanding to a different country, he would visit the country and he'd try all of the transportation options that were available to him as a citizen of that particular country, to identify where the pain points were, where the pitfalls were, to your point, in terms of from a payment perspective. So I think it's, this idea of expanding purely based on sort of a spreadsheet or what you're reading just doesn't make sense.
That's why we love early stage investment as well, because, especially because at that point you don't have many data points. Yeah. And you have to use, of course, you have to use, logic and really be thorough with ensuring that you review all the management accounts and financial projections, and you have to understand the context, and you actually can make some serious mistakes if you don't, and presumptions and misperceptions. and you really need to use your gut, your intuition, based on the kind of the context that you learn. So that's why I think, I have the best job in the world, because you're using all your senses in order to make the decisions every day.
In terms of investing from Atypical, then, is it the preference to kind of come in at the very early stage and then support all the way along? Or is there scope and opportunity at the Series A or at the seed if you haven't quite come in early enough?
Yeah, so for the moment, we do want to come in as early as possible.
Sure.
So part of the kind of the integrated model is that the founder gets seamless and fast capital. So we're trying to get to that. Remember how I was talking about blue sky,
Yes.
from idea to Series A with no bridge rounds? Trying to get to that point, and support them so that, because so much time is spent on fundraising. Founders go and spend up to 12 months sometimes, right, getting the round together, when they should be out there building their product and talking to their customers, right, and leading their team. And so we're trying to eliminate that. So yes, Atypical would be coming in as early as possible, with the right, obviously, signals in mind. At the end of the day, there are sort of guardrails, and we want to make sure that we are not just supporting, the companies that we build just because they are coming out of the studio. So that's super, super important. That's why even kind of the write-off rate, will be adjusted based on industry standards. And so mechanisms in place for that.
That's an interesting point that you flagged there. What happens if the startup, you don't like what you see at a certain point? It obviously sends such an overwhelming signal to the market, I suppose, on one level. If you no longer want to support it, is that startup then, bluntly just effectively dead?
Yeah, I mean, I think it's a usual kind of concern in the industry, in the market, to say, well, if you're not following on, or if you're just doing pro rata, does that, and I think it did sort of come a little bit from, again, the West, with some of the kind of the major funds there. I think it's about educating the market. Again, I think it's not, there may be many reasons why you are not, or one is not following on. Many reasons, depending on where the fund is in its lifetime, depending on, LPs kind of requests and sort of changes in the strategy, all of which we're witnessing at the moment, right? We are really, really, I feel, right now, we're really in this very exciting moment of a lot of change. And so I think it is about educating and explaining and sharing transparently, what are the reasons. But just because, you're not following on doesn't mean it's a bad business.
Because you have multiple funds sort of ongoing, focus, how do you preserve that from being spread thin?
So, two things, and you're absolutely right. It's actually, interestingly enough, even within climate, as we were talking about it, there are so many opportunities. You can do a singular sort of fund in energy, right? But it's actually, what does it take to build that diverse portfolio? The framework that we're using within the pods that I was describing earlier is our kind of lens for really deep diving into these specific opportunities. And it means also saying no to others in that specific time frame.
Sure.
So we've kind of slightly shifted away from just generic, anything and everything goes, to actually saying, to your point, where do we believe are the big bets? Again, leveraging that notion of, infrastructure, AI, technology, kind of the IP that's coming from the domain experts, and the kind of the capital that we can sort of provide. Where are those disruptive companies going to come from? And by the way, again, not all companies are going to be sort of utility scale, right? Not all companies are going to return our fund. But it is about also balancing that with companies that are going to deliver your, kind of your DPI and be sustainably, efficient and financially sustainable. So, but it is through the pods framework that we will be taking those kind of bets.
What's the biggest misconception that people have about emerging markets investing?
The biggest misconception I've seen is that you can copy and paste what exists in the West and apply it to the South. And I know it sounds generic, but actually it really sort of applies across the board of, the economics behind venture funds. we believe that 2 and 20 doesn't work in emerging markets, right? We believe that actually you need more than 2% management fee in order to have a team that is able to support the businesses, hence the studio, for example.
Interesting.
That's one example.
What do LPs think of that?
Sorry?
What do LPs think of that?
Oh, it's amazing conversations all the time. But absolutely, it's about again, it's about building that integrated model, right? So it doesn't mean that you can't have, a fund as a fund structure, because at the end of the day, that's an entity, right? But it does mean that you need to complement it with things like, in our case, the studio, where we have 15 people that are full-time experts and are able to provide that. So it's about doing that homework and doing that structure, which again, it's definitely harder than setting up a singular
For sure.
vanilla fund.
Yep.
But in the end, that is what it takes to work in the markets that we work in. And so again, meeting everybody, all stakeholders where they're at, meeting, and understanding the maturity level and the potential of the market. So the biggest misconception is really sort of copying and pasting, models of the West and thinking that it's going to be successful here.
Can I ask, what would you say, and this is a different question you mightn't want to answer, what would you say is your best investment that you've made?
Oh, my team.
Oh, what a cop out. No, I'm not going to allow it.
I don't know. We have a number of really interesting, companies that are approaching kind of your Series A. Things change.
Yep.
So ask me maybe next year or 2 years' time.
We'll stick it in the calendar. Have you started deploying from Atypical yet?
Yes.
Cool.
We have, we're about to announce our kind of third investment.
Third.
We've announced our first, and we haven't announced our second and third. They're closing as we speak. So my hope is to do that before the holiday break, to end on a high note. And really excited about those three very different opportunities.
What was the first investment? Did I miss this?
Metric AI.
Oh, never mind. I didn't. I did see this. I didn't realize I did not put 2 and 2 together. Okay. Yes. Okay.
That was our first. Yeah.
Very good. Very good.
And the second two are, one is in the kind of the data governance space, and the other one is in the corporate wellbeing space.
Okay, so these are quite diverse.
I hope I didn't give away too much.
No, I'll try my best after this. I'll scour all of the
I'll
different...
whisper in your ear.
Please, that would be great. Alina, this was a ton of fun. Thank you very, very much for your time.
Thank you.
Enjoy Abu Dhabi. Thank you for coming.
Amazing. Look forward to next time.
Okay, brilliant.
Thanks, Jamie.
Thank you.